Welcome back. Today, I think it's important to make a video on Alibaba, um, as I'm sure most of the markets are noticing this, and um, I just want to. I think now is an important time to make a video just in case this does run for obvious documentation purposes, as I've done in the past with Tesla and SoFi. So I believe Alibaba is starting to turn around, and I think for the points that I'm about to go over in this video, I think we are starting to see the China trade start to play out. So, like, even just looking at the chart, this isn't the point of the video, the technicals aren't the point, but just to go over it, right? We've been basing out for over a year and a few months now, so essentially like that's what you want to see before somewhat of a bottoming. So the technicals are definitely there. And then now if we just zoom out, look at the big picture, um, right? China is trying to recover a depressed economy, right? They've had deflation post COVID, and they haven't been able to bounce back. And really, they're doing it quite slowly, which is more strategic and I think better long term thinking. And this is also the time horizon for an Alibaba, right? So um, essentially, China's plan for stimulating their economy was in two phases, which was announced in 2023. Basically, phase one is to resolve the local government debt and then basically transfer that balance to the central bank, which has more stability. And that was planned for phase one of 2024, essentially. Phase two is stimulating the consumption of their consumers and basically stimulate the demand, right? So there are a few ways that they're doing it, yet I don't think we have seen the major stimulus that hopefully comes out. If not, I think they've already put in a floor into the actual equity market. One of their initiatives was um, promoting share buybacks for companies by lending capital to these companies at basically 0% rates, which if you're right a CFO of a company, that is almost a no-brainer, right? To do share buybacks at your current valuations. So I think China's put in a floor. The stimulus isn't really kicking in as the markets wanted to see, but I think they're being more patient, which is potentially a better way to do this, in my opinion. And then another factor is asset allocators, especially in the Western world, were absolutely oblivious to the real economy or the real systems that China has in place in their infrastructure and their advancements in technology and business and growth and innovation, all sorts of things. Because, in my opinion, these Western capital allocators are very focused on their own economies because they have a belief of superiority. Uh, just a personal view of mine. So the fact that nobody wants to touch China for maybe certain authoritative political reasons that nobody wants to cross, which is great because it gives us as right like individual retail investors um, time and opportunity to actually position yourself for these trades. So basically, my point is, if you look at a contrarian perspective from uh, asset allocators, right? If you want to try to beat the market, you want to bet when the market's wrong, and the market is largely these large asset allocators who have the most asset to allocate or capital to allocate, and besides that, my point is now that the world is starting to wake up to what is possibly happening in China, we might start to see a shift in perception towards what is possible for their like growth essentially, and what kind of margins these companies are playing with. Because at the end of the day, these shares are a piece of a company, and if you're able to make your money back through appreciation of equity over holding your shares long enough, then these companies start to look more attractive, just as a pure investment standpoint, right? So basically, the China trade, in my opinion, is starting to play around because Deepseek, right? We've seen their Chinese LLM that runs way more efficiently than what we see out the US. And now China is starting to be seen as a Silicon Valley of sorts, of the eastern side of the world, which essentially is a central hub for innovation and rapid communication and fast decision making, to potentially create lots of growth and prosperity and wealth. So I could be entirely wrong, totally willing to be wrong. I would like to be wrong because prices maybe might go lower in the short term, but I am starting to believe that China is becoming more accepted. We have Alibaba earnings, I believe, tonight. We'll find out in the morning tomorrow, see what the price reaction is. And yeah, I've been covering this trade for quite some time, just staying patient in it. It hasn't really played out as quickly as we would have liked, but we are still happy to be in this position. So this is just a position update. I think the China trade is here. There is some other financial companies out of China that use AI models, which have great performance metrics and also are trading at a discount, which I've been introduced to by a close friend. So I do think that there's plenty of opportunity here, especially if you are right in the right if you're in the financial system, because if China starts to reignite and the cylinders start to increase in RPM, maybe people will naturally start to get an appetite for these investments. So until then, stay safe, manage your risk, and I will see you in the next video. Thank you for watching.